Bismillahirrahmanirrahim. I have already made one video on the governmental fund accounting cycle. But since some of our subscribers and viewers requested more explanation on this topic, I am making this video. I am thankful to all those subscribers and viewers that have made this request. And if you want a video on a specific topic in accounting or finance, then please mail me at accountingamir@gmail.com. This video illustrates a comprehensive exercise on general fund and special revenue fund accounting. It explains how to journalize transactions for general funds and special revenue funds, how budgetary control is done for revenues and appropriations of expenditures through an encumbrance system, how to post journal entries in the ledger, prepare pre-closing trial balance, and finally, how to prepare statements of revenues, expenditures, and changes in fund balances and the balance sheet. Let me show you how the illustration in this video is different from the previous video. First, there is no change in the general and special revenue funds adopted budget. Second, in the previous video, it was assumed that all taxes, licenses and fees and fines and forfeits will be paid during the year. But in this video, it is assumed that only all property taxes will be paid, and that's why no provision for uncollectible taxes is made. Transaction number 3 and 4 are the same, no change is there. But in transaction number 5, there is a change in recording the transactions. In the previous video, a single entry was recorded for purchase order number 1 and 2 and purchase order number 3 and 4. However, in this video, they are recorded separately to make a more rational and effective recording and posting of the transactions. Please like, subscribe and share my channel to search for accounting lessons and hit the notification bell button to alert you for the latest video. For all of your questions, comments and suggestions, please put them in the comment section below. And for webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Accounting is a K. We hope that this video helps students in their academic development and teachers in enhancing their lesson plans and teaching methodologies. We hope that this video helps aspirants of CPA, AICPA, ACCA, and CMA programs. We also hope that this video helps students of Masters in Financial Accounting, Masters in Taxation, Masters in Governmental Accounting, and students who have joined training courses of Saudi Organization for Certified Public Accountants, SOCPA, and other accounting program aspirants. We also hope that this video helps fresh graduates who have joined governmental or not-for-profit organization and want to refresh their learning about the governmental fund accounting, its journalizing, posting, and recording the pre-closing trial balance and financial statements for general fund and special revenue funds. Before we start solving exercises, let us first review the concept of budgetary accounting. Now, government budget determines the estimated revenues and appropriations. This helps to compare the estimated revenues with actual revenues to ensure that the estimates are realized. At the same time, expenditures are made against the various appropriations accounts to ensure that sufficient balances are available for additional spending. Budgetary accounting records estimated revenues and appropriations to establish the reference points for budgetary controls. Government budgets are the important control mechanism as they help in monitoring the actual expenditure with the budgeted appropriations. This helps in evaluating the financial performance of the government and it helps in taking necessary corrective actions where necessary. For example, the estimated revenues help to determine the amounts of resources that will be available for spending during the fiscal year. And if the actual revenue collection is lagging behind, then necessary corrective actions can be taken. Like expenditures are reassessed so that the expenditures are in line with the projected funds. So, in budgetary accounting, both budgeted and actual revenue and budgeted and actual expenditures are recorded. This helps in determining how much revenue has been collected till date and how much more needs to be collected during the fiscal year. It also helps in determining how much expenditure has been done against the appropriated amount till date and how much more can be done for the remaining fiscal year. Recording expenditures against the appropriations help in determining accountability and ensures that actual expenditures do not exceed the appropriated amount. This helps in achieving the objectives of the budgets effectively. Recording budgeted and actual revenues as well as appropriations and charges against them also provide the data needed to cut down the expenditures in case they analyze that the actual revenue collection may fall short. Following budgetary journal entries are recorded to record the budget, to record changes to the budget if any, to record the placing of purchase orders or contracts, that is recording encumbrances, and to reverse the entry when items ordered are received. Budgetary accounting journal entries should be considered separate from the financial accounting entries. Governmental entities always adopt budgets for transactions and events affecting the general fund and often adopt them for special revenue funds. This video will explain transactions that occur routinely in general funds and special revenue funds. I would also like to add that these two funds are subject to similar accounting and financial reporting principles. So the objective of this video is to demonstrate the relationship between budgetary and financial accounting and reporting. Yet another objective is to describe the full accounting and financial reporting cycle from recording transactions and events to prepare financial statements. So let us look into an illustration. The village of Cartsgill, which operates on a calendar year basis, is governed by an elected board of trustees. Its day-to-day activities are administered by an appointed village manager. The village has a general fund which is financed primarily by taxes on real property and a training special revenue fund which is financed by annual grant from the state. The village manager is responsible for preparing annual budgets for activities accounted for in both funds. The budgets become law after review and approval by the Board of Trustees. The general fund balance sheet at January 1, 2013 showed cash of 70,000, no liabilities and a fund balance unassigned of 70,000. Budgetary control over the supplies appropriations is maintained through an encumbrance system. The approved budget for calendar year 2013 is as follows. We have the estimated revenues, we have the appropriations, and since the estimated revenue is more than the appropriations, so there is an increase in the budgeted fund balance. Generally, government use vouchers for payments, and that's why we have used vouchers to record a liability before payment. First of all, the adopted budget is recorded in the general fund at the beginning of the fiscal year. So the first journal entry is made for the estimated revenues, and the estimated revenues are debit as the government earns revenue. The estimated revenue is reduced by actual revenue received. The debit of estimated revenue means that the actual revenue will increase the fund balance, while the estimated expenditures, that is budgeted appropriations, are credit, will decrease the fund balance. So the general entry for recording the general fund at the beginning of the year will be we have estimated revenues for real property taxes of 2 million. Then we have licenses and fees for 70,000. Then we have fines and forfeits for 50,000. Then we have appropriation general government salaries 300,000. This will be credited. This is an appropriation. Public safety department salaries 1,200,000. Appropriation public safety supplies 100,000. Appropriation street maintenance salaries 400,000. Appropriation street maintenance supplies 95,000. And appropriation debt service is for 5,000. Now, since the debit is more than the credit, so the balance, the budgetary fund balance, will be credit by 20,000. If the appropriations are more than the estimated revenue, then obviously the budgetary fund balance will be debit. Now, Cardsgill levies the real property taxes provided for in the budget. Property taxes are payable in 2 equal installments during March and September. Based on past experience, Cardsgill assumes all taxes for 2 million will be paid either during 2013 or soon enough thereafter to pay expenditures attributable to 2013. Therefore, it makes no provision for uncollectible taxes. So the general entry to record the tax levy will be property tax receivable debit by 2 million and revenue property taxes credit by 2 million. Then, because of the timing of the 2 property tax installments, Cardsgill cash flow projection indicate that it needs to borrow 400,000 on January 3. They sell tax anticipation notes in the amount of 400,000 to a local bank, payable with interest of 4,000 on October 3. So you can see that the liability is short term and the borrowing is recorded as a liability for the general fund. So cash is debit by 400,000. It is debit by 400,000 and tax anticipation notes payable is credited by 400,000. Then we move on to number 4. Cards Guild receives cash of 980 from real property tax collection. So cash is going to be debit by 980 and property taxes receivable will be credited by 980,000. We move on to number 5. Now Cards Guild places purchase orders for supplies chargeable to the following appropriations. We have 4 purchase orders. So first of all, we are going to record the encumbrance for purchase order number 1, 2, 3 and 4, and the journal entry will be as follows. Encumbrance public safety purchase order number 1 will be debit by 45. Purchase order number 2 will be debit by 52. Purchase order number 3 by 70. And number 4 will be by 20,000. And the budgetary fund balance reserved for encumbrance will be credited by 187,000. Then the supply order in all 4 purchase orders are received and inspected. So first of all, the budgetary entry made in transaction number 5 for encumbrance will be reversed. And you can see that budgetary fund balance is going to be debit now, and this will be debit by 187,000. And the 4 encumbrances are going to be credit by 45,000, 52,000, 70,000 and 20,000. Then you can see that the invoices for purchase order 1, 2, 3 are for the same amount, that is 45, 52 and 70. However, the invoice for purchase order number 4 is 21,000. Because the order allowed the supplier to ship and bill for additional quantities up to 5%, all the invoices are approved for payment and vouchers are issued. So we have already reversed the encumbrance. Next, we are going to prepare the financial journal entry to record the expenditure and the liability. So the expenditures are 45,000 for purchase order number 1, 52,000 for purchase order number 2, 70,000 for number 3 and 21,000 for number 4. While the vouchers payable will be the same amount, 45,000, 52,000, 70,000 and 21,000. Then the vouchers prepared in the previous transaction are paid. So we are going to make these payments: 45,000, 52,000, 70,000 and 21,000, and cash will be credited by 188,000. That is the total of these vouchers. You can notice that the amount that is shown in the budgetary entry to reverse the encumbrance are the same, 187. But the amount that is shown in the financial entry is greater by 1,000, because for voucher number 4 we are paying 1,000 more than what we have encumbered before. Okay, so now we move on to the next transaction. During the year, Cards Guild receives additional cash from the following sources. We have cash and all. So when we are receiving cash, so cash is going to be debit by 1,110,000. And then real property taxes are going to be credited by 1 million. Revenue licenses and fees will be credited by 63, and fines and forfeit will be credited by 47. Then Cards Guild repay 400,000 borrowed on tax anticipation notes earlier in the year, together with interest of 4,000. You can recall there was a transaction number 3 where they have issued take borrowed money from the bank, and that is a short-term loan, and now they are paying it back. So when they pay back, so tax anticipation notes payable is debit by by 400,000, and the expenditure debt service is debit by 4,000, and cash is credit by 404,000. We move on to number 10. They are paying the salaries of 290, and that is simple. Salaries expenditure, general government salaries is debit by 290,000. Expenditure public safety salaries is debit by 1,175,000. Expenditure for street maintenance salaries is debit by 380,000, and cash is going to be credited by 1,845,000. Then we go to number 11. The last payment for salaries covered the pay period end Friday, December 27. So payment for the period December 28 to 31 will not be paid. So salaries is accrued, it is payable. So once again, these salaries are going to be debit by 4, 15, and 6 respectively, and 6, and we are not paying. This is accrued. So accrued salaries payable is credited by 25,000. So you can note that GASB standards require that salary expenditures must be accrued in governmental funds because they are normally paid in a timely manner and in full from current financial resources. Next, let us prepare the budgetary control ledger accounts for estimated revenues and appropriations. We will first make the budgetary revenue ledger for real property taxes. So we have the ledger for the real property taxes, and you can see in transaction number 1 we have estimated revenue. That means this is the budget item, and this is debit by 2 million. So the difference over here, obviously there is no difference right now. This is the first journal entry for 2 million, and then we can look for other. You can see that in number 2 we have property tax receivable for 2 million, and revenues property taxes is credit by 2 million, and this is property tax. And that is equal to 2 million, and the balance is going to be 0 now. Next, we are going to make the budgetary revenue ledger for licenses and fees and fines and forfeits. So once again, you can see we have licenses and fees, and for licenses and fees the estimate is 70,000. So this is the budget item for 70,000, and the balance is 70,000. Similarly, for fines and forfeits, we have the budget item, and this budget item is debit by 50,000, and the balance is 50,000. And then you can see in transaction number 8, revenue licenses and fees are 63 and 47, and here we have the licenses and fees, and licenses and fees is credit now by 63,000. That means still we have to collect another 7,000 from licenses and fees. As far as fines and forfeits are concerned, you can see it is 47,000. So that means we need to still collect another 3,000 from fines and forfeits. Next, we will prepare budgetary control ledger for appropriations. And we are going to prepare ledger for appropriations for public safety supplies, and we are also going to make for street maintenance supplies. Now you can note that we will not make appropriation ledger for salaries, as such expenditures follow a predictable patterns. For such appropriations, encumbrances serve no control purpose, so there is no need to record the encumbrance for salaries, and the amount available for spending is reduced directly by recording the expenditure. Now, same is the case for appropriation for debt service as well. So, let us complete the appropriation ledger for street maintenance supplies and public safety supplies. And now you can see here that in transaction number 1, this is the budget, and the budget figure, the budget item, and the budget item is how much? For public for street maintenance is 95,000, and for public safety supplies the budget is how much? Appropriation is 100,000. Okay. Then we look for, now we can jump to transaction number 5, and in transaction number 5 you can see that we have placed an order, and we have placed order for purchase order number, place order for purchase order number 1, and this was debit by 45,000. You can see that the available appropriation for street maintenance in the after transaction number 1 is 95, and here available appropriation is 100,000. So once we have made an encumbrance, here we have placed order for once we record the encumbrance. So now the amount available will be 100 minus 45, that is 55,000. Then we have placed order number 50 for placed purchase order 2, and purchase order 2 is for 52,000. So now the available appropriation is 55 minus 52, that is 3,000. And then we have placed order for purchase order number 3. We have placed purchase order number 3, and this purchase order number 3 is for 70,000. So we have a balance now of 25,000. Then we have placed purchase order number 4, and this is for 20,000. So now we are left with another 5,000. Now we move on to transaction number 6, and in transaction number 6 we have received the supplies or the material that we required. So first of all, we have to reverse the encumbrance, and you can see now that when we receive purchase order number 1, so there is a reversal. Now the encumbrance is credit, and this is credit by 45,000. So once again our available appropriation moves up. 45 plus 3 makes 48,000. And we have also received um, and we have to reverse the encumbrance for purchase order number 2. So for encumbrance, so because we have received purchase order 2, so it is credit by 52, so we put 52, and when we sum this up, this becomes 100,000 again. Now we look for purchase order number 3. We have received a purchase order number 3, and when we receive, it is credit by 70. So the amount becomes 75 again, and then we receive purchase order number 4 for 20,000. So it further increases to 95. Now, since we have received, we have reversed the encumbrance, and now we have to record the expenditure. We have and the expenditure for purchase order number 1 is 45. So that is, we say expend purchase order number 1, and that is for 45. So 100 minus 45, we have 55 now, and we have also expend purchase order number 2, and that is for 52. So we have a balance of 3,000 now. Now we have also received purchase order number 3 and 4, so we have expend purchase order number 3, and that is for 70,000. That is for 70,000. So now we are left with 25, and we have expend purchase order number 4, and that is for 21 now. That is not for actually this is 70 from that we have expend, and then we have expend 21. So 25 minus 21, we are left with 4,000 now available for appropriation. Next, we are going to post them in the ledger, and let us see how we are going to do that. Now, first of all, we start with cash, and if you can recall, we have let me show you. We have the opening balance for cash as 70,000, and fund balance unassigned is also 70,000. So we record the opening balances of cash and fund balance. Cash obviously will have a debit balance of 70,000, and fund balance will be for 70,000 as well. And next we are going to record, I have put all the journal entries that we have done. You can see we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We have 11 journal entries, and all these journal entries I have simply put them over here. I have put all the 11 journal entries over here, and from this we are going to post them into the ledger. So we have the estimated revenue of 2 million, estimated revenue of 2 million, that is debit. Estimated revenue, licenses and fees is debit by 70,000. Fines and forfeits is 50,000. General government is 300,000. Public safety salaries is 1,200,000. Don't forget that these are appropriations. Then we have public safety supplies 100,000. And then we have appropriation street maintenance 400,000. Then we have appropriation street maintenance supplies 95,000. Then we have appropriation debt service 5,000 credit, and then we have budgetary fund balance in the credit for 20,000. Then property tax receivable is debit by 2 million. Revenue property taxes is credit by 2 million. Then cash is debit by 400,000. Tax anticipated notes payable is credit by 400,000. Then we have cash debit by 980 and property tax receivable by 980. So property tax receivable is 980. Then we have encumbrance 45 and 52. We have this is for safety supplies 45,000 and 52,000. Then we have street maintenance supplies 70,000 and 20,000. And then we have budgetary fund balance in the credit by 187,000. Then we have budgetary fund balance debit by 187,000. We have encumbrance purchase order number 1 and 2 45 and 52. Remember, don't forget that these are for public safety, and street maintenance are 70 credit and 20,000. 70 and 20. Next we have expenditure public safety supplies, and that is 45. Then we have expenditure public safety supplies 52. Then we have for maintenance 70 and 21. Then we have voucher payables in the credit 45,000, 52,000, 70,000 and 21,000. Then these vouchers are debit, so we put them in the debit 45,000, 52,000, 70,000 and 21,000. We have paid cash 188, so cash goes in the credit 188,000. Then we have received cash for 1,110,000 and property taxes receivable is credit by 1 million. Revenue licenses and fees is revenue licenses and fees is how much? 63, and this is credit. Then fines and forfeits is credited by 47,000. Okay. Next, we have tax anticipated notes payable, and tax anticipation notes payable is debit by 400,000, and expenditure debt service is debit by 4,000, and cash is paid 404,000. This is cash account. Next, we have expenditure general government salaries 290,000 debit. We have expenditure public safety salaries 1,175,000. We have expenditure street maintenance salaries 380,000. And we have paid cash 1,845,000. Then we have expenditures, general government salaries, and this is 4,000. We have expenditure public safety salaries 15,000. We have expenditure street maintenance salaries 6,000. And we have accrued salaries payable 25,000. And now, so we have recorded all the journal entries. Now we have posted rather all the journal entries. And now we will look into the balance. For cash, it will be 123,000. For fund balance, it will be 70. There is no balance. For encumbrances, estimated revenue, real property taxes has a debit balance. Here also we have a debit balance of 70. Then we have 50, and 300 is a credit balance. 300,000 is a credit balance. Then we have safety credit and public safety supplies credit. Then we have 400 for appropriation for street maintenance, 95,000. We have, and then appropriation for debt service is 5,000 credit, and budgetary fund balance is also credit by 20,000. Then we have tax anticipation, and the tax anticipation we will be having a balance, a debit balance of 20,000. Obviously there is no balance for tax anticipated notes payable. Revenues property taxes is having a credit balance of 200. And then for budgetary fund balance there are no balances. Expenditure public safety supplies has a balance of 97,000. Expenditure street maintenance supplies has a balance of 91,000, and there is no balance for voucher payables. Expenditure for general government salaries, this will be 294,000, and this will be 1,190,000. Expenditure debt service has a debit balance of 4. Accrued salaries payable is 25, and expenditure street maintenance salaries is 386,000. So that is how we post all the journal entries into the ledger as we have done. And next, let us see how to prepare pre-closing trial balance, and let us see how it is going to look like. So I have simply put all the T accounts that we have made just now over here in a tabular form, and we are going to record each one of these items. Remember that budgetary accounts and the financial accounts are recorded separately. So we have estimate. So let us start with the first one, and the first one is cash 123, and that is a debit balance 123,000. Then we have the fund balance credit by 70,000. Then we have the estimated revenue of 2 million debit. We have estimated revenue licenses and fees 70,000. Then we have 50,000. Then we have appropriations of 300,000. We have 1,200,000. Then we have 100,000. Then we have appropriation street maintenance supplies, that is 400,000. Then we have street maintenance supplies 95,000. Sorry, this was salaries, and then this is supplies 95,000. Then we have appropriation debt service 5,000 credit. Budgetary fund balance credit 20,000. Then we are going to look for the other balances. You can see we have property tax receivable for 20,000. Then we have revenues, property taxes. It is credit by 2 million. Then we have expenditure. There are no balances here. Here we have expenditure for 97,000. Public safety supplies 97. Then we have 91. Then we have revenue, fines and forfeit 47. Revenue, licenses and fees 63. Then we have expenditure, general government salaries 294. Then we have public safety salaries 1,190,000. Then expenditure, debt service 4,000 debit. Then we have accrued salaries credit 25. And finally we have expenditure street maintenance 386. And if we have recorded correctly, then the two totals must be equal. So this is 4,325,000 and this is also 4,325,000. So that's how we prepare the pre-closing trial balance for the general fund. Next, we are going to record budgeted and actual revenues as well as appropriations and charges against them for special revenue funds. Now, Cargill established the training special revenue fund based on state law. The state gives all municipalities that have law enforcement units an annual grant that may be used only for paying police officers while in training status. In accordance with the state law, any balance remaining in the special revenue fund at year end is carried over to the following year. On January 1, 2013, Cargill's training special revenue fund has cash of 10,000, no liabilities, and a fund balance restricted to 10,000. Based on preliminary data received from the state, the village trustees adopt the following budget for the training special revenue fund. We have the estimated revenues and the appropriations, and here you can see that the estimated revenue is less than the appropriation, so there is a decrease in the fund balance by 5,000. So first of all, we are going to record the estimated revenue and the appropriation, and once again in the estimated revenue, real property is going to be debit by 45,000. Now, because there is a decrease in fund balance, so this is going to be debit by fund balance. Budgetary fund balance will be debit by 5,000, and appropriation will be credit by 50,000. Then Cardsgill receive a check from the state for 30,000 as a police officer training grant. The state also advises Cardsgill that as a result of budget difficulties, no further grant will be made available. To ensure its training expenditure do not exceed available resources, the village trustees amend the training special revenue fund budget, reducing both the estimated revenue and the appropriation by 15,000. So cash, we are receiving cash 30,000, so cash is debit by 30,000, and revenues, intergovernmental revenues, is going to be credited by 30,000. Then we are going to record the we are going to revert this this entry, because they are paying, they are reducing the budget by 15,000. So appropriation that was credit before is going to be debited now by 15,000, and estimated revenue, intergovernmental revenue that was debit before, will be credit now by 15,000. Then salaries paid to employees 33,000. So expenditure public safety is debit by 33 and cash is credit by 33. Okay. Next, we are going to record the budgetary revenue ledger for real property taxes, and we are going to post them as well. So I have simply put the three general entries over here, and we are going to post them 1, 2, and 3. First, we are going to prepare the revenue ledger for real property tax. The budgeted amount, you can see, is already given to us. We have recorded as 45, and that is debit by 45,000. So the total is 45. And then we have property taxes, and property taxes is 30,000. So we need to collect another 15,000, but you can see that the appropriation, the budget and amount, is going to be decreasing by 15,000. So the estimated revenue now, you can see, is debit by 15,000. Sorry, this is going to be, there is an appropriation public safety, this is going to be reversed. Appropriation is debit and estimated revenue is credit, and there is a mistake here. This should be a credit amount. So the budget is credited by 15,000, and now 15 minus 15 is going to give you a zero balance. Next, we are going to post them into the ledger, and for this we are going to have, first we have the fund balance. If you can remember that there was a fund balance of 10,000 and cash was also 10,000. So we have a fund balance, and fund balance is going to be credit 10,000 and cash is going to be debit by 10,000. Then we start with these general entries. Estimated revenues, intergovernmental, is debit by 45,000. And budgetary fund balance is debit by 5,000. Appropriation public safety salaries, we have already recorded 45,500. Public safety is credit by 50,000. Then cash is debit by 30,000. Revenues, intergovernmental revenues uh, is credited by 30,000. Then appropriations is public safety salaries is debit by 15,000. Estimated revenue intergovernmental is credited by 15,000. Then expenditure public safety salaries is debit by 33,000 and cash is credited by 33,000. So now we can record the balance. For fund balance it will be 10,000. For estimated revenues, intergovernmental revenue will be 30,000. Budgetary fund balance will be 5. Appropriation public safety salaries will have a credit balance of 35,000. Cash, we will have a balance of 7,000, while revenues intergovernmental will have a credit balance of 30,000. Expenditure public safety salaries will be debit, having a debit balance of 33,000. Next, we are going to prepare the pre-closing trial balance for special revenue funds, and we have put the same T account as you can see over here on the left hand side. And now we are going to record the pre-closing trial balance. So we have the estimated revenues, and don't forget that we record separately budgetary accounts and the financial accounts. So estimated revenue is 30,000 debit. Budgetary fund balance is 5,000. Then we have appropriations, public safety salaries, 35,000. Then we have fund balance that is restricted, and if you can remember, fund balance that was restricted, that was 10,000. So we have a restricted fund balance of 10,000. The cash balance is 7,000 debit. Then we have revenues, intergovernmental revenues for 30,000 credit. And finally we have expenditures, public safety salaries, 33,000. Once again, the total and for the pre-closing trial balance must be equal, and you can see that it is equal for debit and credit. Next, we will prepare the statement of revenues, expenditures, and changes in fund balances and the balance sheet. So I have simply taken the pre-closing trial balance of a special revenue fund and pre-closing trial balance of the general fund, and I have put them all in this on the left, you can see over here. And we are going to prepare the statement of revenue, expenditures, and changes in fund balance. We will be doing it for the general fund and also for training and special revenue fund. So first of all, we start with we can do it together. We are going to have the revenues and we are having the expenditures in our pre-closing trial balance for the general fund and for the special revenue fund. We first of all, let us start with the general fund, and you can see that the property taxes are how much. Obviously we are not going to go for the budgetary accounts, we only go for the financial accounts. So we have the property tax for 2 million. Then we have licenses and fees, and licenses and fees is 63,000. Fines and forfeits is 47. And this intergovernmental is for the special revenue fund, and you can see that is 30,000. Sorry, we will not take the budgetary accounts. We are going to take the financial accounts, and the intergovernmental revenue is 30,000. So the total revenue for general fund is 2,110,000, and for training special revenue fund the total revenue is 30,000. Next we record the expenditures, and for the expenditures we start with the general government salaries, and the general government salaries is 294,000 for general fund. And then we have the public safety salaries of 1,190,000. Then we have public safety supplies, and public safety supplies is 97,000. Then we have street maintenance salaries, and street maintenance salaries is 386,000. Then we have street maintenance supplies of 91,000. And then we have the debt expenditure, debt service, and that is for 4,000. For training special revenue funds, we are having only, how many expenditures are there? We are having only expenditure public safety, that is 33. So this is public safety salaries for 33,000. I think there is no other. Yes, we have only one 33,000. So now we can make the total, and the total expenditure is 2,062,000, and for training special revenue fund it will be 33,000 only. Next we look into the excess or deficiency, that is we will be subtracting revenue from the expenditure. So here obviously we have excess, and the excess amount will be 48,000. But when we look into the training and special revenue, you can see that we have 30 minus 33, so this will give us a negative, negative 3,000. Now we have the fund balance. If you can remember, the fund balance for fund balance was how much? The fund balance at the year number 1 was 70,000. And for the training and special revenue fund, the fund balance is 10,000. So now we can make the balance, and the balance is 118,000, and this is going to be 7,000. So these are the fund balance at the end of the year. Finally, we are going to prepare the balance sheet, and for this we have cash of 123,000, and for special revenue fund we have cash of 7,000. Then we have property tax receivable, and the property tax receivable is 20,000. So we make the total. So the total assets are 143,000 and this is going to be 7,000. Then we have the liabilities. We have accrued liabilities. If you can remember, for salaries of 25,000, there are no liabilities over here. So the total liabilities are 25,000. Here the total liabilities are 0. Then we have, you can remember that this 10,000 was a restricted fund. So this goes under the category of restricted fund. And this is going to be how much? The ending was how much? 7,000. So 7,000 ending fund balance restricted is going to be 7,000. For the general fund, the ending balance, fund balance was 118, and obviously that is going to be unassigned. That is a general fund, so that is 118,000. So we have the total of liabilities. Total fund balance is 118,000. And we can make the total of the liabilities and the total fund balance, that is 143,000. And here also it will be the total fund balance is 7,000. We make the total and the total is 7,000. And you can see that the assets are equal to the liabilities and fund balance, and same is the case for the revenue fund balance as well. 7,000 assets and 7,000 liabilities and fund balance. So this completes our discussion on the governmental fund accounting cycle for two governmental type funds, the general fund and special revenue fund. You may have observed that the recording of transactions for the two funds are quite similar. Modified accrual is the basis of accounting for the two funds, which is a combination of cash basis and full accrual basis. The difference between the two fund accounting are that the general fund revenues do not specifically support particular programs or agencies. It accounts for all unassigned resources, while the special revenue fund account for the report the proceeds of specific revenue sources that are restricted in this case, or they may be committed as well. For both the funds, first the adopted budget is recorded, that is the estimated revenues and appropriations. The budgetary control ledger are made for estimated revenues and appropriations for both the funds. Encumbrance entry is recorded first on any purchase. However, in case of expenditures that are normally paid in a timely manner like salary, encumbrances are not recorded. As such, encumbrances serve no purpose for control. So I hope you have enjoyed this presentation, and if you found value in this video, then please like, subscribe and share my channel and hit the notification bell button to alert you for the latest video. For webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Accounting is a K. Remember, effective questioning brings insight, which fuels curiosity, which cultivates wisdom. If you have any question or any suggestion regarding this session, then please put them in the comment box below or by email, and inshallah I will reply you back. Thank you so much and happy learning.